The largest cryptocurrency exchange is going public. Coinbase confidentially filing for a public offering last night, marking an industry milestone. The company did not say how it will structure its offering in particular. Coinbase has more than 35 million verified users in more than 100 countries and more than $25 billion in assets on its cryptocurrency platform. It's raised more than $500 million from backers including Andreessen Horowitz, Tiger Global Management, Y Combinator, Greylock Partners, and others. Now, the Coinbase IPO comes amid a record-breaking run for Bitcoin prices, which broke through the 23,000 mark a day after hitting the 20,000 mark. Joining us now is Brian Brooks, acting comptroller of the currency. Brian is also the former chief legal officer at Coinbase. Brian, thanks for being here with us. What exactly in particular has got you the most interested about the recent price action in Bitcoin?
Well, let me tell you something, Dom. I can't speak to the specific price movement, but I'll tell you what I'm worried about is that all of this is happening in an environment where we're about to have a change of presidential administrations, and there's calls on Capitol Hill to dismantle some of the regulatory protections we put in place for this stuff. So you think about the fact that my agency has tried to make it safer for people to custody in national banks. We've talked about banks supporting some of these stablecoin projects. If those protections aren't in place, I really worry about the environment for these kinds of things. So that's what I'm most focused on, is how do we preserve the safety for people who participate in that market.
So I mean, the perspective that you bring is interesting. You've been on the side of Coinbase before. You're now working for the government. What exactly is the future for cryptocurrencies, given the construct that we're seeing with government entities and the need to regulate this kind of environment?
Well, Dom, we're at a really critical inflection point right now, is what I would tell you. It's kind of a fork in the road. So one path forward is that we find ways of addressing money laundering risks, and we find ways of addressing terrorism financing, which I think can be done. But we make this safe for the consumers and investors who participate. That's why the banking system has such an important role to play. But the other path, which is a very real potential here, is that we politicize some of these tech issues, whether it's crypto or fintech more broadly. We politicize it by undoing all of the good work this administration has done to make it safer, okay, to make it more real. And if we do those things, as, for example, Chairwoman Maxine Waters' letter recently suggested, then I'm not sure if we have enough of a foundation to move forward here. So it's all about consolidating regulatory gains and consumer protections that we've tried to put in place here. That's got to stick around.
So how exactly then do you make it safer for not just the investors, but the people who are trying to traffic or use Bitcoin to make transactions? I wonder whether or not the stuff that you're seeing right now with price action makes it that you have to put more of the kind of compliance impetus on the companies or more of the regulatory policing on the government.
Well, there's a role for both, I think, right? So there are bad actors in this space, as there are in other spaces. And the role of the government is to make sure that markets are well regulated and well organized so that people who are transacting know that they're transacting with good people and not bad people. Part of that means that, as in any financial market, there has to be tracing and no anonymity. But part of it also is that if you hold crypto or if you're in any other space like this, you need to know that you're not going to lose it. So that's why it's important to people that they be able to custody their assets in a bank, for example, the same as you might custody your stock certificates or any other assets that you own. And again, this is a real political debate right now. People may not realize this, but there's leadership in Congress who's urging the incoming Biden administration to roll back some of those protections, I think in the name of politics, not in the name of protecting investors.
So if that's the case, then, I mean, we're watching what's happening right now with Coinbase, you know, trying to kind of come up with an IPO, and it's being scrutinized by all different regulators. You're in the office of the comptroller of the currency. That actually kind of implies that there is a banking angle to this whole thing. Is it fair to say that cryptocurrency is going to be considered like a banking type product in the coming years?
Well, I think the way to really think about it is cryptocurrencies are tokens that power networks, right? That's what blockchains are, is they're networks. And in the future, the role that banks really have is managing payment networks, as they've always done. Crypto is a different kind of payment network in that it's faster and it's cheaper. And Bitcoin and other tokens, they're assets that reside on those networks. But at the end of the day, all of us make our payments on payment networks. When you swipe your credit card at the coffee bar this morning, you're using a payment network. So if we clamp down on these things in ways that aren't safe, those networks can't really be allowed to go forward. And what we need to do is preserve the safety of the network while also preserving, the value of the asset. Those things have to happen in tandem.
Shepard Smith here. Thanks for watching CNBC on YouTube.